So the markets are dropping and you're seeing your investments evaporate. And on top of that, you're seeing all these negative headlines and you're kind of seeing some other headlines that are telling you to calm down. But the question is how? Hey guys, it's Sunmin here and welcome back to Your Money Game. So it's currently pretty rough times in the stock market, and if you've got any investments in and you're watching it drop, it doesn't matter if you're a new investor or a seasoned investor, it's really unsettling. And I think right now my personal portfolio is down by the double digits, and for me it's also a challenge to try and maintain my composure. So that's why I'm sharing with you a few of the techniques that I use to try and manage my own anxiety in these turbulent times. Now the first method I want to share with you guys is breathing techniques that help you calm your body and mind. Now, if you're feeling a lot of this anxiety, not only doesn't it feel bad in you, but at the same time it can actually impact the way you make decisions. So you want to try and calm yourself down as much as possible, especially if you're feeling a lot of that stress. I used to teach people the art of presentations, and one of the main things that we try and do is calm ourselves down before stepping in front of a crowd. And one of the techniques that I learned, which was really useful, is actually breathing techniques. And one of them is called the box breathing technique. So the box breathing technique is a really simple one that you can practice, and you can do this anywhere and anytime. It's really a simple exercise of breathing in for 4 seconds, holding for 4 seconds, and then breathing out for the next 4 seconds. And once you're done with that, it is repeating it for a few times until you feel yourself calming down. And one of the interesting things about this technique is that it's actually being used by Navy SEALs as well to calm themselves or reduce the stress that they feel whenever they are in combat. What's important is that it's the focus it gives you, it's the deep breathing that's involved, and on top of that, there's the timing element which allows you to control your breath. So I provided a link below so that you can check it out and read it for yourself. So the next thing to do is to not beat yourself up over a mistake that you might have made. It's bad enough that you're already losing money. Don't add some more guilt and self-loathing and feel as if that you should be making perfect decisions just like the pros. Now, a lot of us average Joe investors think that, yeah, we should be holding ourselves up to a really high standard. But the truth is, when you look at even the professionals in the stock market, fund managers actually don't really do that well. There's been quite a lot of studies that show that long-term performance of some of these fund managers who are paid really well actually don't even beat the market index. 80% plus of all these really highly paid fund managers don't even beat the benchmarks that have been set. And for those of you who are curious as to why some of these fund managers don't do that well, I've attached a link below so you can read a bit more about it. So the next is a phrase that more regular investors might have heard of before, but if you're new to the game, maybe you might not have. And it's called time in the market, not timing the market. So what this principle means is that if you're invested and you stay invested and you consistently invest over the long term regardless of what happens, you will win in the long run. So what this actually translates to in terms of actions for us is not selling out of panic and then staying out of the market. So the first chart I'll be showing you here shows the London FTSE and what happened if you stopped investing just because of a panic and then you stayed out of the market and hoping to kind of get back in at a later point in time. If you kind of miss some of the best days in the market, what happens is that your long-term performance is really impacted. The second chart is somewhat related to the first, and it's really saying don't try to time the market and when you want to get back in. Now what this piece of research shows is that if you kind of panicked and moved into cash and wanted to kind of like hang on and then tried to get back in at a later point, they calculated the 1 month, 3 month and 6 month consequences of that. And what they found is that if you have just stayed in and invested and not moving your money out of stocks, you'll actually do even better. So hopefully you calm down a little bit more, and then you can perhaps use this next method, which is revisiting your long-term strategy. If you find yourself overly concerned about what the stock market is doing in the short term, it might be a sign that you have a strategy that doesn't really take into account the kind of risk that you are comfortable with. So some of the things that you can do here is take a really good, honest, hard look at what you have invested and ask yourself, are you really investing or are you just speculating? The next is to think about this term called asset allocation. If you have an overexposure to stocks and not enough in the safer items like bonds, maybe a savings account or some more stable product, you might have a ratio that is not suitable to your risk appetite. So the last method that I want to share with you guys is reduce the self-torture. So I'm guilty of this myself. I'm always opening an app with technology. It's so easy to just like tap a button on your phone and open up the app that's tracking your investments, or you tap another app that's showing you the news. What you should be trying to do is reduce that. Again, I'm guilty of this, and it's something that I'll be trying out myself to, instead of checking it on a daily basis, to reduce that amount maybe to every few days or maybe even once a week. So at the end of the day, if I know that my strategy is meant to be long term, I shouldn't be checking it on such a regular basis, and that's exactly what I'm going to try and do from here on. So in summary, I really hope that these troubling times aren't overly stressful for you. What you need to do is to try your best to use the different techniques that I might have lined out here, find your own, but try and calm yourself down a little bit more. So as long as you don't make overly hasty decisions or panicky decisions where you're selling out of worry, or you are staying out of the markets because you feel as if that, oh my god, it's such a fearful situation, revisit that long-term strategy of yours and then stay calm and stay the course and invest for the long term. So thanks for watching, guys. If you found this helpful, I'll really appreciate a thumbs up and share it with a friend of yours who might be overly worried in a difficult investing period like this. Now, next week, I'll be talking a little bit more about the FIRE movement and why I think it's a really useful community to learn from. And with that said, thanks so much and keep playing your own game.